Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Gabriel Yap. He's the Executive Chairman of GCP Global. Gabriel, great to have you on the show.
How are you, Brian?
Now, Gabriel, before I get your insights, let's take a look and see how markets are performing across the region. We start today with Bursa Malaysia, which is at 1,609.79. It is up 0.46%. The SGX is at 3,183.63. It's down 0.09%. Now, moving ahead to the Nikkei. The Nikkei is in the green. It is up 0.75% at 29,930.43. But we've got to see a red beyond this. Shanghai Composite is at 3,456.74. It's down 0.74%. Hang Seng is at 28,798.07. It's down 0.72%. ASX 200 is at 6,984.3. It's down 0.21%. And rounding up the Asian exchanges, it's the Kospi, which is down 0.09% at 3,140.48. So what's your view on market performance this morning, Gabriel?
Well, Brian, is actually quite disparate in the sense that the Asian market, which actually lags the US, because in the US, you have the likes of the Dow crossing a new high. You have the likes of S&P also making a new high above 4,000. But Asian markets seem to be really lackadaisical for this week and still very much lagging the US. So the major markets like China and Hong Kong, which actually had a very shortened week because of the Easter holidays, have still not measured up to mark. I think markets just waiting for the next quarterly set of results, as stimulus. So that will be an interesting set of results that one will be looking at.
Now, Gabriel, there was shock news out of Singapore yesterday that Deputy Prime Minister Heng, who is the PM designate, is basically stepping down to allow the next generation of leaders to assume the mantle of Prime Minister moving forward. What's your take on this impact on Singapore?
I think the impact on Singapore will be interesting to be watching because the next person that will come in has to be seen as someone that's likable among the populace. Not that much of the populace have much of a choice, but in terms of policies for the government, I think many investors basically will be heartened to know that there's very little that will change. I think it will be a steady go, slow forward, risk non-risk preferred but risk adverse kind of situation for Singapore, as has been the case for the last couple of years. So that's why in situations like this, you have the likes of defensive stocks and REITs thriving in Singapore.
Now, let's turn our attention to your specialty, which is basically tech stocks. And the share of Tencent-backed financial technology firm LinkLogis today surged more than 8%. Now, what's your take on this? Is this a signal that the appetite for technology stocks is back in China and Hong Kong?
I think the technology is interesting in the sense that some of the laggards like Kuaishou, Meituan, Tencent have started to catch up slowly this week, slow and steady. So if your viewers had listened to our program 2 weeks ago, 3 weeks ago, you noticed that we were calling a bottom for the technology stocks then and there. And you noticed that since then, they have slowly crept up. They are making higher lows, but it's still good opportunities going forward. So in the interim period, when you look at many of the results that we released like Meituan and Tencent, you notice that they have continued to affirm that the underlying growth is strong. So take, for example, Tencent. They posted revenue of $482 billion. Can you imagine that?
Wow.
Around $482 billion in renminbi, of course. And the profit is 159 billion. So if you actually work out the operating margin for this business, which has been around for already more than 30 years, you notice that it's still north of 20%. Not many companies in the world really can have this kind of profit profile. So those are the kind of strong companies that we highlight in the program. Those are the kind of strong companies that we like in our portfolio, as well as those are the kind of companies that we share in our investment talks and seminars and our classes.
Now, also looking ahead, you see the impending listings of Didi Chixing. They're looking at doing a SPAC in the US at $100 billion valuation. And also you have Trip.com, which is eyeing a secondary listing in Hong Kong. What's your view on these upcoming potential listings?
Well, I must say that I'm quite surprised at a huge jump in the valuation of Didi Chixing, because the year prior, after they have just managed to actually kick out Uber from China, the valuation was in the region of $22 billion. And the last round of funding, where the Series C investors came in, that was at price of $61 billion. And that was only just early last year. And right now we're talking about 100 billion, so it's a big jump of about 60%, so of course it's not as phenomenal as the jump in Ant's valuation before the IPO was put off in November last year. But Didi basically is actually thriving. It's actually a clear number one in China in terms of ride hailing. So I'm actually quite optimistic about valuation being justified. Of course, I would actually prefer that it will not be as high as what that the press is talking about. That's 100 billion. But then again, considering that it's via an SPAC, then there are actually lingering fears on whether the valuation would just be hit just for the IPO, and then after that the stock may just go sideways, as what Uber has actually done, as well as Lyft in the US. Moving on to Trip.com, I'm actually welcoming the stock back, a secondary listing back to Hong Kong market, because it's one of my best performers last year. The stock is actually up 60%, knowing the fact that the old name was C-Trip, so they actually dominate the domestic travel market. So the domestic travel market, if you look at the earnings numbers in the recent ones, that is actually the recent October numbers, Chinese New Year, Lunar New Year numbers, whether you're getting numbers from Trip.com or you're actually getting from Meituan, which actually does discounting for hotels, travels, you will see these numbers actually in terms of MAU, DAUs building up very, very sharply. This is a huge contrast to international travel. But if international travels actually move up, then of course, Trip.com will even benefit more.
Now, Gabriel, once again, thank you very much for your insights and for coming on the show.
Thanks, Brian. Have a good weekend.
Yeah, we've been speaking to Gabriel Yap, Executive Chairman of GCP Global, on the ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.